All right, we're here with Matt Gunn at Generations Mortgage, and let's just get right to it, Matt. What is the difference, and you hear this all the time, between being pre-qualified and actually being pre-approved?
Pre-approval is going to be a full underwrite of your finances, and that's going to require us to take a look at your income tax returns, your pay stubs, your bank statements, and a full look at your credit report as well.
Now, pre-qualification, is that just like a preliminary look over the phone?
Yes, that's exactly what it is. What you're wanting to do at that point in time is just pass the eye test. Some simple calculations to determine your income, a quick glance over the credit report, make sure there's no major glaring issues, and yeah, that's really just get you moving in the right direction.
All right, so pre-qual, pre-approved, but what's the importance of actually being pre-approved before I go out and start shopping for a house?
Well, that pre-approval, since it is a full underwrite of your finances, you have actually applied for a mortgage at that time. So you would know at that point in time that your loan would be approved. In many cases, that makes your offer much stronger. Since the underwrite's complete, you've also shaved off several weeks of the process. So waiting for an appraisal and title work, a few updates to the paperwork, and you've got yourself a home.
Also, I know how much I can spend, right?
That's true. That's true. That's a very big part of it. You don't want to get into a situation where you've gotten in over your head because you didn't do your due diligence up front.
So when I go shopping for my mortgage, how do I compare these lenders? What's the best way to compare apples to apples when it comes to good lending?
It really boils down to financially what puts you in the best position. Having the lowest rate isn't always the best option. Due to the fees that it takes to obtain that rate.
And the big word, the 500-pound elephant in the room, credit. How do people with not so great credit get their loan? Can people with bad credit still get a mortgage?
Well, there are a variety of loans for everyone to take advantage of. And what makes a loan good for me doesn't necessarily make it a good loan for you. That's why it's important to visit with a lender before you start this process. You want to identify certain features of certain loans that may be beneficial to you or features that you'd like to avoid. You don't need to have perfect credit. Very rarely do we see anyone with perfect credit. You would certainly be in the minority.
All right, let's talk down payment. How can I get into a house with little money out of pocket? What's your best advice?
There's several ways that you can alleviate the high cost of purchasing a home. One thing you can do is negotiate some or all of your closing costs to be paid by the sellers. Locally in this area, we do also offer programs designed for those that are not high income earners that allow you to put no money down, in other cases as little as 3 to 3.5% down.
Just tell us straight up, why should a home buyer shopping for mortgage use you and your company?
Well, we're just as excited about the home buying process as you are, and I think that instantly translates to better customer service. So whether it's 11 a.m. on Saturday or during business hours, we want to be here to help you through that process, educate you. Any questions that come up, we certainly want to be available for that.
What documents do they need? What do they need to bring in to be prepared to come and meet with you?
Some of the documents that you're going to need is a copy of your driver's license, your last 2 pay stubs, 60 days worth of bank statements, your last 2 years tax returns, and a homeowner's insurance quote. Those 5 documents there will get you started.
All right, thanks again to Matt Gunn, Generations Bank, and I'll be back next time with more helpful real estate insight.